So, what's Valhalla Network? We're building the banking system for the people, governed by the people. So to start with, I want to go through the problems with the current banking system. Now bear in mind, we haven't got too long, so I'll try and condense it down. So the first problem is, there's a serious misunderstanding of the role that banks play in society. There's different economic theories, and most of them don't even include banks in their theory. When I went to HSBC, I was taught that banks are financial intermediaries. They just simply move money from one person's account to another person's account, and they're not that important. Of course, that's not true. Why would they teach the truth? The real answer is that banks are much more like wizards. They create money out of thin air. They create credit. Every time a bank gives out a loan, they're not moving money from one person's account to another. They're just creating money in your account. 97% of the money supply is created by these private banks, not by the central bank. So they do play an important role. Now, if banks are the lifeblood of the economy, small businesses are the backbone. They account for roughly 2/3 of total businesses, or total employment, can't remember which way round. And 97% of employment is through small businesses, so they're important. And they can't get funding through the capital markets because they're too small. It's really difficult for them. So you need a banking system to cater for these small businesses, to allow them to grow and allow them to thrive. However, despite this fact, would it surprise you to hear that the banking numbers are falling? Across the EU in the last 20 years, the number of banks has declined by about 50%. The banking system is concentrating. We're getting fewer banks, and again, larger and larger. And as banks grow in size, empirical evidence shows that banks care less about small businesses. They just want to lend big amounts of money out to big businesses, big PE firms, and that's it. And you can't blame them. They've got they've got to grow their balance sheet by a certain amount. They've got to keep their shareholders happy, so it makes sense for them. However, you still need small banks, so that's a huge problem. So what's now happening? Well, we're seeing increasing amounts of boom-bust cycles, increasing amounts of these artificially created boom cycles due to this unproductive credit that's being created by the big banks, and then these bust cycles as all these non-performing loans come through. So what do we need? We need to focus on small businesses. We need to focus on setting up small banks to lend to these small businesses. Now, a little bit of theory for you on the reasons for this. As I said, banks create credit. There's different types of credit creation. We can break it down into two streams. You have credit for the real economy, which impacts GDP growth, and you've got credit for the financial economy that doesn't impact GDP. And then you've got three cases in total. So the real economy, you've got credit for productive purposes. So that's investment credit. That's where small businesses, for example, are using the loans that they're getting from the banks, the credit that's being created, to invest, let's say, in a small piece of machinery to produce more bread or more goods or something like that. They then sell those goods to get revenue, and they use that revenue to pay off the loan, and you get credit destroyed. So what's the outcome? GDP growth without inflation. Fantastic. So we want that. What's the other type of real GDP credit creation? Well, it's consumptive credit creation. Credit for consumption. And that's what we've seen throughout 2020 to 2022, which is why our chairman very early on was predicting high inflation and also GDP growth, because why? Well, you get nominal GDP growth, but you don't get real GDP growth. So that's where banks are creating credit for the consumer, so they can purchase more goods and services. You know, the government shuts everyone down, says you can't work, well, they need to borrow to be able to live, so you're going to get a huge amount of inflation coming through. So that's also unproductive. We don't want that credit creation. So what's the third type of credit creation? As I said, that's to the financial economy. So that's credit for the asset markets. So if you want to buy more houses, or big PE firms want to invest in the asset market, again, it's unproductive. Why? Well, prices are going up, the loans can be repaid, but as soon as the tap is turned off and those banks stop giving those loans out, what happens? Well, the asset market is massively overpriced. Suddenly, you get that bust. And then suddenly no one can pay back their loans. The banks struggle because they've got all these non-performing loans, and then people have to bail them out, or the taxpayer have to bail them out, or the central bank can bail them out. So we want that first credit creation, we want that productive. And you get that by lending to small businesses. So what are we doing at Valhalla Network? Well, we've identified this. Our chairman, Professor Richard Werner, is the inventor of quantitative easing. So he understands about credit creation and when you need it, when you don't, and what it should be used for. He's the author of a #1 best-selling book, Princes of the Yen. And as he's German, he's also very familiar with a German, very successful German banking model, the Sparkassen, which is 1,500 community banks, where they're all set up to help small businesses in their local area. They give back to their local community as well. They reinvest a portion of those profits back into local community initiatives. So that's great. We need that. They made German a massive leader in small business champions, known as hidden champions, where small businesses are the leaders in their niche segments. So we're going to do that at Valhalla Network. We're going to focus on small businesses, set up thousands of small banks all across the world, but we're going one step further. We're also decentralizing the governance of it by having it all under a foundation that's governed by a DAO. So a Decentralized Autonomous Organisation. So people can purchase these tokens and be part of the system and govern the DAO and put in proposals. How do we grow the network? Where are we setting up banks? How many banks are we setting up? What do we do with all the dividends that the foundation has received from the banking network? Because, might surprise you to hear, banks are very profitable. And as interest rates go up, they become more and more profitable. So success to date has been fantastic. Since we launched about a year and a half ago, we've had a massive amount of support, especially from Werner's fans, obviously, because they're very familiar with credit creation and what's needed. We've raised 7.7 million to date as well. We've just closed our private round, and we're about to open our last and final private round before we go public next year. And that's it, apparently.